Hey y'all, what's up? It is AM Trades, and today I'm going to be doing a trade recap as well as our weekly recap for day number 13 and 14 of our Zero to Hero series on the channel. So this is the kind of journey of me taking myself from zero to over $1 million in active funded capital by the end of the year. So if we start on Thursday, which is the last day that I haven't made a trade recap for, we ended up taking one trade and it ended up being a winner. We made a couple percent on the account, as well as our Friday and as well as our Friday trade, which we also took one trade, ended up being a loser, and that's what it is. So we were down 1% from Friday and up a few from Thursday. So without further ado, we can get into the recap. So here we can see that we have, hold on. Here we can see that we have the NASDAQ, okay? And I actually switched up the chart because I'll go back to the other one for now. If we go to the, where is it? I believe, where's the Iwanda chart? Am I crazy? US 100 maybe. Because I had all of my markings done up on there. Regardless, we can mark them up again. So, if we start on Thursday, we go back and we're going to mark out our session open on Wednesday, sorry. So, Tuesday, that is Wednesday. No, sorry, I'll be doing Thursday. Thursday at 9 a.m., okay? And then we can do the same thing on the S&P 500. If we get rid of all these drawings. So, Thursday at 9 a.m. is where we're going to start it, okay? We can see that we did have an impulsive nice move up, and I ended up catching that move to the upside. So if we look here, we have as well as our midnight and our 6 p.m. open. So if we go here back to midnight, and we always take the opening price, so the top of the candle, mark it out in blue, as well as our 6 p.m. price right here. That is our new daily opening gap. Okay, so that's where price is going to want to draw towards, as you can see here in pre-market before seeing our move up. Regardless, then now we have the S&P 500, and sometimes what will happen here is we'll have a divergence between both, not only in just price action, but also where one will want to draw towards a new daily or new weekly opening gap, or wanting to draw towards a premium or discount level highlighted by the midnight and 6 p.m. opens. Okay, so we have that marked up. Now we can go down to the 15-minute. Right, and then drag this to 9:30, which is the precise time that the market opens. Okay, and so what ended up happening is we saw market open here. Okay, and I want you to look at this low right here. Okay, actually, first of all, if we go back to the hourly, we can see that we were reacting off of a high time frame. It might have been 4 hour. Yeah, so we had come down. Okay, and reacted off of this area, so where this fair value gap was just starting, and we ended up creating an equal high. However, if we look on the S&P 500, what we ended up doing is at market open, we had come down further and we had swept that low. So we didn't sweep that low on the NASDAQ, right? This one. So that was a 4 hour SMT divergence. And then if we go down on the 15-minute, which is what I saw during the day, is we manipulated down, okay? So keep in mind when we're below our midnight and 6 p.m. opens, what we're going to want to do is if we're below price, we're going to want to buy because it's implied discount and then implied premium to the upside if we wanted to short. So we were in discount. We had our 10 a.m. manipulation, which is what I'll usually get my trade off of, okay? So we go to our 10 a.m. manipulation on the 5 minutes so I can show you the divergence nice and clearly, okay? So you can see time-based manipulation, we wick down here. And keep in mind how we didn't take that low, okay? And if we go and grab our trend line, that can be marked out. So we didn't take the low, and that created a smart money technique. And then if we go look on the S&P 500, we can see is that we did take the low. So that was a bullish smart money technique. And what I wanted to see from there is a nice rally upwards, and then we can catch the move up all the way up to all-time highs, Okay, so if we go back to the NASDAQ, what I ended up doing is going down on the 1 minute and looking for an entry. Now, as soon as we saw that manipulation and that S&P starting to hold, I want to take the first confirmation that I can so that I can catch the majority of the move. And what I ended up doing is entering a long position off of this fair value gap right here. Okay, this one right here, first fair value gap of the range, and I placed my stops below this low here. Okay, so about 140 pip stop loss, and then I was targeting first this high. First this high. So I took the majority of my profits off here, and then I was also then targeting, I targeted here first, so for a 1 to 3, and then I targeted the minus 1.5 standard deviation of the manipulation leg. So when we're at all-time highs, what I use to find my take profit levels is I will drag my Fibonacci, and you can see I added the standard deviation here, and I will drag it on the manipulation leg of the range. So this is where we manipulated down, okay? And so that means that this is where the standard deviation is going to be valid from. And what I ended up doing is taking the -1, the -2, and the -2.5, which are my take profit levels. And so I had my second take profit here. It was also in line with the higher time frame TR pocket as well. Okay, so -1 here, right? And I took profit here as well as at this high. This high right here. So this ended up being we got that second take profit pretty much to the tick there, and then it ended up coming back down and stopping us out at break even. All right, so we made about 3% on that trade, and we have a few withdrawals on their way, and then that was the trade for Thursday, so that's plus about 3.5%. And then if we move to Friday, what we ended up having is some very choppy price action. I expected it to be bad because it is a Friday after sweeping all-time highs. However, it was very, very, very choppy, more than I expected. So if we go here and we get rid of all of our previous markings, and we go back to the hourly and mark out our 6 p.m. and midnight opens, what you guys will see is that we were in let's see here. We were in a premium at market open. So I wanted to see sells. Okay, so there's our midnight open, and our 6 p.m. open should be right here. Yep. So we came up, filled this, manipulated upwards, tapped into this higher time frame 4 hour for value gap as a turtle soup, and then we wanted to see price action come to the downside. However, like I said, I usually take my trades off of the off of a 5 minute or more S&T divergence. And when market opened, our 10 a.m. open was to the downside. We manipulated down. So I wanted to see buys from here. So like I said, we manipulate down. We didn't have an S&T here, which is likely why this setup didn't play out. If we go and compare this to the NASDAQ, the S&P 500 here, and go back to, So here, look at price action. Okay. And then if we compare that with the NASDAQ, we had almost no differences in the way that price delivered there. Okay. So that is something that made it so the momentum was not there as much. Okay. And why we ended up taking a loss on longs that day. So I ended up longing from this for value gap from here. And I have my stops below the low. Oh, no, sorry, not there. From around market open, so here. And I longed from the first for value gap, so where would it have been? It would have been around here, I believe, yeah. So I would have gotten tagged in right here. And we can see that we swiftly saw a move down into this order block. We were respecting it because if we wick below this order block, then it's no longer valid, so I wasn't looking for a trade anymore, right? So we wicked below it. However, I got out of this trade early because, I don't know, I actually broke my rules doing this, but price came down so aggressively and so quickly towards my stop loss that when we saw this big candle up, I just closed it all here. So that ended up being about a negative 0.5% loss on all the accounts. But it's whatever. We ended up green in the week, about 5% this week, and we did quite well for ourselves. So yeah, we should have a couple more accounts on the passing, and that's definitely going to be what we are kind of just continuing looking forward to in the next couple weeks. We had a lot of news this week, including PPI and CPI. If we go and look at what we saw the last week. So that's right. So no news Monday. And then Powell was speaking at a Netherlands financial event during the morning. 10 a.m. 10 a.m. on Tuesday. and that kind of gave a bullish push to the market after PPI came in bearish, right, for the S&P 500, and then we saw bullish news for the rest of the week. See, all of this red means that it's bad for DXY and that the Nasdaq and S&P 500 will rally. And then Friday there was pretty much no news, as well as sweeping all-time highs the day before. Price action was going to be quite bad. But yeah, I'm excited to trade into all-time highs again. I enjoyed it quite a lot the last time, and we were making some nice returns because the moves were so impulsive, right, as they are to the upside. And then so next week, oh man, this week is going to be great. Look at that. So we have Sunday, we have Powell speaking, which isn't going to do anything to the market because market isn't even open at that time on Sunday yet. And then we also have Waller speaking on Monday, which means that Monday is not a no news Monday. So we should have some okay price action on Monday. Tuesday as well is going to be pretty good. And we have meeting minutes on Wednesday. So that means that we are probably only going to be trading the AM session, not the PM session. And then Thursday is going to be a lot of great news, especially after FOMC. We're going to have a nice volatile day on Thursday, and then Friday as well. So we have a full week of trading this week, which means that we can hopefully get probably 3 or 4 more accounts passed and get those up and running. I have moved away from from scalping on the futures accounts because price action has been worse, and I'm also not as great at scalping. Those accounts were just kind of used as a testing the water because they were only $20 each. But yeah, with that being said, that is today's trade recap, and for the 15th and 16th of May. And I'll be back with daily uploads. I've just been super busy, guys, but I really appreciate it. And I'll see you in the next one. See ya.